It's going to start. Okay, so it started. So those are then the fourth section which we were talking about is coverage sections, where you will mention that your risk item, which suppose is car in this case, like if I take an example of auto insurance, the risk item could be the car, like the item which is you are going to insure. So about that particular car, what is the coverage you are buying for? So that car could be have a road the, breakdown somewhere on the road. So do you have that particular coverage? If you have, then you can call the insurance company and tell them, okay, I have had a breakdown on the road. Can you send some engineers to make my car working? So those type of coverage with details, like one policy can have multiple coverages, and if you are buying all the coverages associated with the policy, your premium will go higher. And if you are only buying the basic coverages of a policy, your premium will be low. Okay, that makes sense, right? To everyone, it should make sense that we will be actually, when we are working in the product, we will encounter these things. So this is why I'm telling you all these things. And then the fifth thing will be there on the policy is the premium information, like how much premium you will have to pay for that particular policy. Okay, and it will have your if you are saying like I want to pay my premium monthly, then it will give you the segregation of how much you will have to pay monthly, or if you are paying it quarterly, or you are paying it half yearly or yearly. So those kind of detail will also be there along with the premium details, how much premium you have to pay for that particular policy. And then there will be underwriter decision whether that particular risk is covered by company or not, and then they can go ahead and take a decision that we want to give or sell this policy, and then we can issue the policy documents. So again, these are different sections, and each section should be very clear to you that a policy contains all this information. Any questions?
Vijay, suppose like you mentioned like risk details and coverage details.
Mhm.
So suppose like if we take some life insurance, okay. So can you explain some examples on risk details and the coverage details, how it will be?
Sure. So risk detail is basically the risk item which is you are going to insure. Okay. So let me give you an example. Okay. So now your risk item or the risk detail could be if you are going to insure your house. So the risk detail will mention like uh, the details about the risk you are going to cover. So in this case, it will have all the details about your house. Okay, but instead of house, your risk item is your car, and you want to buy an insurance for your car. So in that case, your risk item becomes car, and this section will have the details about your car. What type of car you have? Is it a SUV? Is it a four-seater? Which engine it is using? How much costly or how much value it has? All those details. Coverage detail is actually what type of coverages you are buying for that particular risk item. So as an example, for car, you might have a basic coverage of third party liability, right, where you will only cover the coverage for the third party accidents. So that means the company is liable to pay for the third party against which you are going to have some accident, suppose in future. But if you want to also include coverages like theft, if your car is stolen, then you will be a company will be liable to pay you that much value for your car, only if your coverage is included in your policy. The theft coverage is included in your policy. Similarly, you can have fire coverage included in your coverage or in your policy. The fire coverage will mean that if your car is or house is on gets fired, then you are liable to get money from insurance company, right? But if you don't have that particular coverage included for your risk item, then company is not liable to pay you anything. Okay, this is the basic meaning. So even if you have a policy and you have insured your house or car, but suppose you did not had any fire insurance coverage, then actually policy will not be good for you to file a claim because you don't have that coverage, right? And if you include all the coverages, obviously your premium will go higher because you're trying to cover all the areas of your risk item. Okay, understood?
Okay, so like for car, like we have like first party and third party. So like
Mhm.
apart from that, still we have like if something we can do some insurance also. Still we have some other insurance also, I guess, right?
Sorry, I didn't get the question.
No, usually for car or bike, like we will do like first party or third party insurance.
Correct, correct, correct.
Okay, so apart from this first party and third party also, like I guess we have some more insurance policies also, like we can apply, right? I guess.
Actually, generally speaking, you don't have multiple policies on a particular risk item. So,
Okay.
I think what you are saying is that, I have one car and I can buy an insurance from, say, New India Assurance. And then again, I can buy another policy from other insurance carrier, suppose Tata Group company, right? Uh, Generally, we don't do that. Like we only buy a single policy. Uh, and, in some countries it is restricted by law. But in India, I think you can still go ahead and buy two policies on a particular risk item.
Okay, fine.
You can include different coverages. So
Okay,
I,
sorry to interrupt.
yeah, go ahead.
Sorry to interrupt. Like after this, can I continue my session?
Oh, you're back.
Yeah,
Okay, no problem. We can include your session maybe tomorrow.
yeah, okay. Sorry.
No problem, Karthik. You can be on mute. Okay, so let's go ahead next then. Now let's understand the difference between a quote and a policy. Okay, so quote is generally it company will give you to show. So suppose if you go to market and you want to buy a laptop, right? So you will see the quotations from different companies before actually you buy the laptop. So quotation is actually where you will see like this much premium you have to pay and these many coverages will be included. All those details it will have, but it is not a policy yet. It is just a quotation, like if you pay the money, then it will be converted into policy. But it is just a quotation that you are if you buy this particular policy, you will have to pay this much premium. So all those details. So the quote is generally a quote where you will see that you supply all your data, basic information, and depending on that information, company will give you a quote or a rate, like this is the price or the premium you will have to pay for your particular policy you are trying to buy. So that is quote. Once that customer is happy that I want to buy this policy and they pay the premium, this quote now becomes a policy. This is the difference between quote and policy. There should not be any confusion. Quote is not a policy, but is just a quotation to the customer that you are liable to pay this much premium if you want to buy this particular policy. Okay. Any questions on quote or policy? And basically in the quote you will supply all your information also. And depending on that information, company will calculate, okay, you are liable to pay this much premium. Okay, if there is no question, let's move ahead. Now we have seen, like, policy, customer is happy with the quotation and they buy the policy and we send them the policy documents. So now the policy becomes active. Okay, and it has some term associated with that policy. So for generally for life insurance product, it could be your entire life, or it could be 65 years of age. For car insurance, it's generally 1 year. No, that is called term of the policy. Within that policy term, a customer can say, again, I'm not happy with the policy, I want to do a cancellation. Or there could be some situation where they are not able to pay the premium, and company will say that they will send out a notice, cancellation notice, that uh, since you have not paid us the money to us, we are going to cancel your policy. And cancellation means the policy which was active for certain duration or the certain term, that will no longer be effective, and customer is not liable to file any claim on top of it. Okay, this is called cancellation of an insurance policy. Once a policy becomes effective, you can still go ahead and cancel it. Like so, as an example, I wanted to give an airline or hotel example where you make a booking, but after booking you realize that you will not be able to make it. So then you put a cancellation, right? So this is the similar thing. Once you buy a policy, but you are not happy with something, or from as a customer, or from the company side, they find out that this customer is not paying money or the premium. So cancellation could happen in both the cases. Okay. Any questions on cancellation of an insurance policy?
Vijay, one small thing.
Uh-huh.
Regarding a cancellation, we have any like a time period, like within this period we need to go out for cancellation?
There is no time period. So it could happen anytime during the term of the policy. So suppose I gave an example for life insurance. Your life insurance policy could be valid for entire life term, or it could be effective till 65 years of individual's age. Or car insurance company can be valid for 1 year during that policy term, right? Whether it is entire life or till 65 years of age or just 1 year, during that entire term of the policy, you can go for cancellation at any moment.
But if we go like an example, I mean to say for 5 years we have paid, and the rest of the years we are not going to pay. But the amount what we paid for 5 years, we can't able to get it back, right?
No, you cannot.
Okay.
Because you were insured for those 5 years, right? And you might have had claims also on those 5 years.
Okay.
So in cancellation, the company is not liable to pay any money. That is a good question. Yes. So if customer says, I want my money back, that is not possible. Okay. Let's move ahead then. One more thing we need to understand about insurance policy is actually it's an advanced concept. Endorsement of an insurance policy. Now suppose your policy is active, and it could be any policy about your house or car or life. During that policy term, as I mentioned, it could be entire life or till 65 years of person's age, or 1 year, depending on the policy which you are buying. During that policy term, you want to make some changes to your policy. Okay. Suppose you bought an insurance for your car or bike where you did not buy the fire coverage, but now you think that you should have the fire coverage included because your vehicle is at risk for fire, and then you want to change your policy to include your another coverage. It could be multiple type of changes actually in the policy. Any type of change in the policy during the policy term is called endorsement. Okay. Any questions? It's just simply the wording you will have to remember that, because business will be talking about endorsement, and they will, when you start working in insurance projects, like, we have a bankers project. So there might be some story assigned to individuals saying that on endorsement, such and such action should happen, and you should have some question asked depending on the flow of endorsement. But if you don't know endorsement, then you will not be able to move ahead about that particular work. So endorsement is, and again, I'm going to show you everything in the system also, like how EIS has implemented all these things. But before I show you, the concept wise, it should be very clear to you. So when I say endorsement, we are talking about mid-term changes in the policy. Okay, any confusions, any question? Okay, and then last thing about endorsement is that when you do some endorsement, your premium might be changed. So suppose now you are including fire coverage, right, for your vehicle. then obviously your premium is going to be increased. So suppose if you are decreasing any coverage from your policy, your premium also will be affected accordingly. Okay, in some cases it actually, if it increases or decreases the premium, but there are some admin level changes in a policy. If you do those admin level changes, the premium doesn't have any impact. But if you are changing some rate bearing field or rate bearing data, then your premium is going to be impacted. Okay.
So yeah, a question here. Do we all know what is rate bearing? What that basically means? We should be asking all that questions.
Okay, so that is good question, Piyush. So rate bearing field is, so suppose you are adding a coverage. So that coverage addition is rate bearing for the policy. Okay, because it impacts your price for that particular policy. Similarly, if you are you have a vehicle and you have had a few modifications in your vehicle and your vehicle value goes high, then if you are adding those value also in your vehicle, again that becomes a rate bearing field and your premium will go higher, right? Similarly, there are other fields also which are rate bearing, but there are some admin level changes. For example, like if you are changing your insured name, right, that doesn't impact anything on the premium side. So if you have a policy and you want to just change your name in that particular policy, would that impact your premium? No, right? And suppose you are changing your address might have some rate bearing impact, but generally speaking your address might not have any difference on your premium. So those level of data I am talking about. There could be some rate bearing changes in the policy, or there are some non rate bearing changes in the policy. Any questions? Okay, so are we good on endorsement now? Okay, so let me quickly move to the next slide. And actually, I don't want to scare you. This is actually my last slide. Okay, so if you are thinking about there are multiple advanced concepts, there are not many. We have spoken about quote versus policy, and then we have spoken about cancellation of an insurance policy. If you are doing canceling your policy, then that talks about cancellation of that insurance policy. And then I have spoken about endorsement, like the midterm changes in your policy. And then the last concept is, once you have a cancelled policy, right? There could be some cases like customer is not able to pay. Right? So suppose I have a policy, and actually I had a policy in December. I had to pay the premium to LIC, but I did not pay it. So what they said they did is, after 2 months they sent me a notice period saying that the cancellation notice that you have this policy with us and you have not paid the premium for the last 2 months, and your policy will be cancelled if you don't go ahead and pay the premium. So what they did is they cancelled my policy. Now, after cancelling the policy, I have a grace period given to me. Okay, if within that grace period I make the payment again to LIC, now my policy will be reinstated. Okay, see this keyword, reinstatement. So reinstatement is your cancelled policy becomes reactive if you do some actions. There are two kind of reinstatements we have, but the concept of reinstatement should be very simple, that you had a cancelled policy, but now that cancelled policy you want to make it active again, so you will have to go through some process, and that process is called reinstatement. Or in other words, reinstatement is the process to activate your cancelled policy. Very simple concept, right? But insurance companies generate a lot of revenue because of these things, that there are hundreds of policies getting cancelled every month, but many of those get reinstated also, and customer pay back, and then they reinstate the policy. So this is a simple concept. Now there are two concepts within reinstatement: reinstatement with lapse and without lapse. What to do when your policy lapses? That means when you make the payment or when you do the reinstatement within the grace period. So like my policy is cancelled, but I have a grace period of 30 days. Okay, so if I make the payment within those 30 days, my policy will be reinstated without any policy lapse. Okay, my premium will not change. Everything will be same. My policy term will remain same. Everything will be same. But if I don't do that in the grace period, then my policy lapses. That it was cancelled and also it lapsed. And if I do the reinstatement now, then I have to go through a bigger process, and I might have to pay them more premium. Okay, this is the only difference, and it's a very simple concept. People get confused with what is lapse and what is without lapse. Even people who are working in insurance for a long time, they also get confused. But it is a very simple concept, that a policy, if it is getting reinstated within the grace period, right, that is without any lapse. And if I'm reinstating my cancelled policy after my grace period is over, then that is with lapse. Any confusion I have created, or am I clear to you guys about what is reinstatement? Very simple concept.
Yeah, I have a question.
Uh-huh.
Like whether customer can claim the insurance in grace period, like policy will be there, right? It doesn't lapse in grace period.
But on a cancelled policy, no. To file a claim, your policy must be active.
Okay, but in grace period, whether the policy will be inactive or it will be
Policy will
disabled.
be in the cancelled state.
Okay.
Okay. And once you make the payment again, then you might reinstate the policy. The grace period is just that that you have this much time to make the policy, and we will reinstate your policy. If you don't make the payment within that grace period also, you still will have the cancelled policy, but it will lapse also. After this, reinstatement will be difficult, and you will have to pay more money. Okay. So there is another concept here. Actually, is my last slide. But here I also want to mention one more thing to you guys, that in very rare cases. Any question? Okay. So in very rare cases, a cancelled policy, instead of reinstatement, a company or the customer can say that it is easier for me to buy the new policy than the cancelled policy reinstatement. I'll be at benefit if I am issued the new policy. So that process is called rewrite. Rewrite means that insurance policy will be rewritten from scratch. Okay, in that case, customer will be issued a new policy number. But in reinstatement, it will be the same policy number. Everything will be same. They are reinstating the same policy. But there could be some instances where customer will say, or the company will say that this policy, this cancelled policy, we could not be reinstated. Instead, we can give you a new policy, and that process is called rewrite. So just quickly wanted to mention that also, so that you don't get confused, or if you have anything, I think the bankers might have something for rewrite, and they might have something for reinstatement also. But these are similar things, but don't get confused with these things. Like, these are different things also. These are similar, but very different thing. Reinstatement is of the same cancelled policy. Rewrite is rewriting the policy from scratch, and it will issue a new insurance policy, and the other, the older policy will still be in the cancelled state. Okay, with that, I think I am done with this slide. Any questions? Okay, so I'll stop recording.